Hello everyone and welcome to the channel. Today we're looking at the latest 13F filing for Scion Asset Management LLC. For those of you who don't know, this is the investment firm run by Michael Burry, Dr. Michael Burry of The Big Short, who at this point needs little introduction, but he's most famous for predicting the inflation that we're experiencing now here in 2022, as well as the housing collapse in 2008. And so what's interesting about these 13F filings is they give us a peek and insight into what the big players in finance and investing are doing, and we get to see what they're buying and use those decisions to influence the information we're using to decide on what companies we invest in and what companies we sell in. So there's a lot of interesting things going on here, and I think a lot of what's happening here has been missed by other people talking about Michael Burry's buys and sells. So I'm going to break it down for you right now. First things first, and I want to put this into the context. The market value right now of Michael Burry's portfolio as of March 31st is only $200 million, which is a big change. The previous quarter, it was only $74 million, but you can see here in the grand context, here's quarter 2 of 2021. He had $2 billion in assets under management. Now, even after all these gains, it's only at $200 million, with the lowest, of course, being Q3 2021, which was $41 million. So he's still largely out of the stock market, but all things considered, compared to quarter 4 2020, he's about the same. Now, what did Michael Burry buy and what did Michael Burry sell? So just to give you a quick overview, the top buys were Apple, Bookings Holding, Discovery Incorporated, Google, and Cigna. And the top sells were Fidelity, General Dynamics, Impex, which is the SPAC, GEO, which is a private prison company, and CXW CoreCivic, which is also a prison company. Now we're going to break down exactly what this means. But first I'm going to take you over to the General Holdings page so you can see exactly what's going on as I'm talking about it. So the first thing that surprised people a great deal was this put on Apple, which is almost 18% of the portfolio. So what a put is, it's basically a bet that Apple's share price will go down, but also at the same time too, sometimes people buy put contracts and they're hedging against another bet that they're doing in their investment portfolio that we can't necessarily see. So just keep in mind that while this is pretty good evidence that he wants to short Apple, it could also be a hedge against other financial transactions he's doing, so you can't 100% look into these buys and sells that are on the 13F. Now the Twitter commentary on Michael Burry's moves are quite interesting. One person here is commenting, and I don't necessarily agree with this, but he's commenting that the reason why Burry bought puts on Apple is because smartphone sales in China dropped like a rock. Others are just reacting with disbelief, saying it's bold to short Apple even with puts. And here's another one, oh man, that's gutsy betting against Apple, the buyback machine. And here's another one agreeing with the comment from before, their exposure to China risk probably. And here's one I do agree with, and this is why you need to be careful looking at these 13F filings. The description for Apple put position is hugely misleading. Options on 13F's quote notational exposure, he paid far less in premiums. So what this is essentially saying is that while it is true that the value of all these puts in aggregate is $35 million, almost $36 million, the amount of money he's actually paying to maintain that short position is actually a very small amount compared to the notational value. And here's another one that's interesting. He says, interesting that Michael Burry bets against the biggest position of Warren Buffett, about 50% of his portfolio. Well, I think it's safe to say that Michael Burry and Warren Buffett don't agree on a lot. Alright, so next down the list is Bristol Myers, and this one's interesting also because it's probably the bigger of the two positions compared to the Apple put, just in terms of how much capital he needs to maintain it. And so Bristol Myers, for those of you who don't know, is pretty much a blue chip, standard, run-of-the-mill, dividend, biotech pharmaceutical company. And what's interesting here is that they have solid revenue growth. And I've been following this company for a long time. You can see 32,000 employees. They've actually stayed, ironically, really far out of gene therapy. But I also could be projecting my own biases onto this because I used to be a huge gene therapy investor before that investing thesis played itself out. So that could be a commentary on wanting to buy traditional and conventional pharmaceuticals, but beyond that, there's any number of ways you could speculate on the fact that he bought and held this blue chip company, so you really don't know. Number 3 is interesting. So this is Bookings Holdings, and I suspect a lot of you have never heard of this company before, so I'll bring it up for you. To just cut to the chase, this is one of those classic 45-degree angle charts, and what Bookings Holdings does is, and this is the interesting part, so you can see here it's a travel and restaurant online reservation services company. So pretty much this is the travel company incarnate, right? This is like the Berkshire Hathaway, the Amazon of travel. So if I had to extrapolate what's going on here, I think this is a bet that travel is going to pick up and this company is going to make more money and would be a good long. Which could make sense because obviously we're seeing that anxiety for coronavirus is decreasing and also the restrictions are lowering as well. Now obviously the downside risk to this is that interest rates could go up and seriously impact people's ability to travel, and also because this 13F is only reflecting the very end of March, and by that point the war in Europe hadn't escalated to what it is now, and back at that time gas prices and fuel prices weren't as bad as they are now, so this could be an outdated look on the situation. But regardless, there is a sizable bet here on bookings. So the next up is a pretty sizable long here in Google, and it looks like what he's doing is that he's getting back into tech after a lot of investors lost their money in tech and are starting to bitter and sour on it. He's doing the opposite of what the crowd seems to be doing. He's getting back into tech right now, which is really interesting. You can see that here with Google, and also there's yet another long bet here on Facebook or Meta platforms. So again, these are two pretty solid tech bets after the fall, so he might be just trying to time these two. But it is interesting that now he's changed from bearish on tech to bullish on tech, which is the complete opposite of everybody else. Now I want to move on to his sells. So he was making a big deal about how he's expecting inflation to really pick up and the crime rate to increase. Yet here we are now on his stock portfolio as of the end of March, and he's sold out of GEO and CXW. I'll bring these two up for you right now. So here are Core Civic and GEW. These are both private prison companies, and I will admit, it looks like he got the timing on these right, but overall, these things are just negative 45-degree red chart companies. And so his sell out of both of these private prison companies is very revealing. Many people on my channel reported that they followed Michael Burry into these private prison companies, and it's interesting to see if they made money. Personally, I was never in them. So Michael Burry is now officially out of private prison companies. It does make sense too, because their revenue's been declining pretty steadily since 2019. So overall, looking at this portfolio, it seems that Michael Burry did in fact time the crash from 2021 to today. It looks like he is slowly getting back into the stock market, which is interesting as well, and it seems to be he's transitioning from those inflation hedge companies and those crime companies into tech, which is the opposite of what people are doing. So you could argue that based on these investment moves, you could extrapolate that he thinks that the worst of the crash is over and there won't be a Great Depression this year. Now, of course, the counter argument to that would be that he's actually focusing on these larger, safer companies, for example, Bristol Myers, Google, Facebook, among others. And also in the grand scheme of things, his portfolio is only the same size as it was in Q4 of 2020, and he's still largely out of the stock market, according to these 13F filings. And it is interesting too, according to the poll on my Telegram journal, t.me/Eugene Chargrain, 65% of you are out of the stock market entirely, or are just a little bit, tiny bit in the stock market yourself. So that's actually very similar to Michael Burry compared to the results here on my investing journal. Now, if you want to get my up-to-date investing thoughts as soon as they happen, as soon as the news hits, follow the Telegram journal at t.me/Eugene Chargrain. There I can type up a post much more quickly than I can put out a video, so that way you're getting the news as it hits rather than waiting for the videos on this channel. That's all for this video, and become a channel member for more exclusive content.